Hello, and welcome to Bridgeford Trust Company's Delivering Direction and Control podcast series. Our podcast series is designed to educate, challenge, and inspire listeners while keeping you updated on developments regarding modern trust law and powerful planning opportunities available, all in an effort to deliver direction and control to clients and their advisors.
Welcome to another edition and installment of our podcast series. I'm David Warren, chairman of the board of Bridgeford Trust Company and co-founder, and very excited about the success of the podcast that we've been able to have over the last 40 plus episodes. And today's a brand new format, very exciting to add the video component. And we thought long and hard about who to be our first guest in the video aspect of things. And we found the best looking guy in the Northeast, Jonathan Williams. And so we appreciate Jonathan joining us today. Hello, Jonathan.
Subjective.
Hey, it's all in the eye of the beholder. Now, I'm very excited. For a long time, Jonathan, I've wanted to do this with you, and it's great to be able to talk a little bit about your background before we get into some great conversation about what we're both seeing in our respective industries. But Jonathan Williams is based in central Pennsylvania, and he's one of those names that I have heard for years and years, going probably all the way back to when I was practicing law, Barley Snyder, as being among really the elite of financial planners, wealth managers, family office people, and actually having worked and continues to work with some of the largest families, not only in the region in central Pennsylvania, but really in the Northeast and across the country. So from afar, I've been a fan of Jonathan Williams. I had the opportunity to be introduced to him through a mutual friend and my business partner, Terry Harris, who, of course, is the former managing partner of McConnell Nesbury. And he, for years, was telling me how wonderful Jonathan was as a professional and how stellar his reputation was. So I was happy to be introduced in the capacity of his new role and new company, and really how Bridgeford and Jonathan and Summit Trail can collaborate. And we'll talk a little bit more about that. But Jonathan has a very impressive background. In addition to having built a phenomenal reputation, he's been with some great banks. He was at Wilmington Trust for over 12 years, had tremendous success there, and built a really loyal following. And again, a phenomenal reputation, and has been with UBS and M&T Bank, and really has the perfect combination of big bank, sophisticated experience, and brought that with him to what he's doing now at Summit Trail, which we'll get to. He's got all kinds of distinctions. He and I both are 40 under 40 graduates, I guess, although I'm sad to say I'm not under 40 anymore, but I don't want to talk about that so much. Yeah.
Don't worry. We're in good company together.
Very good company, yeah. But yeah, Jonathan, again, for such a long time, I've known of you, I've heard about you, and it's just been a real privilege to get to know you and to get to know your company and to do some great collaborative work. So thank you for joining us.
Man, I don't know what else to say. That kind of intro is, I could just sit here and listen to you talk, and I'll take all the compliments. Thank you. I appreciate it.
And that ends the podcast. Thank you for joining. We just want to make sure the video works. Yeah. No, I mean, and it's all true. But no, I think one of the things that has struck me in as we've grown our relationship over the last 2 or 3 years is, quite frankly, how similar we are and how similar we view the world. Can you please just talk about your experience and all the things that kind of brought you to the point to do Summit Trail, which is really, really exciting and is almost an exact same type of paradigm that we bring to the market based on independence. But yeah, please tell us about your background.
Yeah, well, it's I also am an admirer, not even from afar, but up close here with you, David, and that is I think it's really fun to sit with, like-minded people like yourself, entrepreneurial people like yourself. And just so happens when you have that same type of spirit as it relates to being a business owner, being a leader in business, you also work with the same types of people, and being able to sit with you on a podcast or sit with you at a dinner or collaborate with you on different cases we work together on. It's been wonderful getting to know you, David. And so thank you for having me. And but from a background standpoint, this is all I've ever done in my professional career. Really, I haven't been in any other industry. In terms of from your traditional schooling background to right into the financial services. Started way back with UBS, very short stint there for a couple of years. And then Was out of the industry for about a year and a half, and then got back in 2008, which was a wonderful time. Wonderful time for the markets, the country. It was a heyday, right? And so, um, that started in 2008. Yes, I was at M&T Bank at the time,
Okay. Yeah.
and then back then, really M&T. I mean, great bank, great commercial bank. They really didn't have a true private wealth management division, and to be totally transparent, and I hope your podcast would like that, and that is, I was certainly not qualified at the time to take that position where I did, and that was it was a private banking.
Did you
And
lie on your resume again? Is that how you got that
no,
job?
didn't lie. Just I don't know. I think I was 25 or something like that when I got the
Oh,
position.
wow. Wow.
So yeah, I'm 41, so 2008, and so. Um, but what was interesting, what I got to give them some credit for, is they were really looking to build something. And, I worked for UBS's ultra high net worth division. And I guess, when you think about this area, central Pennsylvania, there really isn't a dedicated ultra high net worth. Well, there is now, but at the time then, there really wasn't a dedicated um, professional services team in the financial arena that served those types of individuals. It was all outsourced to, of course, your Philly and your New York City. And there were some firms here locally at the time. You remember, of course, BNY Mellon, your old employer. There was PNC to a point. There was Bryn Mawr Trust, which at the time was Hershey Trust. But really, there wasn't really a dedicated practice, in my opinion. And
Yeah, if I could jump in, I completely agree with you. And I even think, although I have a tremendous experience at Bank of New York Mellon, they by no means were considered local, and they didn't even
right.
want to be
Yep.
perceived as local. So I agree. I think that you continue to be extraordinarily unique in the central Pennsylvania market, serving ultra high net worth folks in a way that I'm not even quite sure who directly would be a competitor with the kind of sophistication that's locally grown and locally executed right here in central PA.
Yeah, and so we really, back then, it was, hey, people, we ran the private bank operations there, and we merged that with the wealth advisory services to really create the high net worth, ultra high net worth service unit, in which then in 2011, M&T bought Wilmington Trust and kept the name. And so we grew that business very rapidly, becoming one of the top teams in the country here right out of Harrisburg. I had some great, people on my team, people around me, great mentors. And then really, I would say in 2015, 2016, the industry changed tremendously, as you know, David, where independents started becoming more of the preferred method in terms of servicing the ultra high net worth community.
Yeah.
And
And
so I think,
let's pause on that if we could, just because I think it's such an important common theme that resonates and really is what we're both passionate about and why we both did what we did and created. I mean, I'm happy to see more independence, but I still don't think there's enough in our industry. And I think that the conflict of interest is something that continues to amaze me. At some of the names you just mentioned, I'm not going to pick on anybody. And so, talk to me about that. When you were transitioning into an independent, conflict-free solution, what was the trajectory for you to figure out that where you are now is where you should be?
well, I was really fortunate where I went on a more than 2-year due diligence process to figure out what is the next step, not just for my career, but for my clients. And, given what I was describing earlier was the real shift from not only a regulatory environment, but just from a scale standpoint on the large institutional bank-owned wealth management firms where, I had a very important, I would say, client service model in my mind at that time, which I still have today. And that is, we shouldn't have more than a 20-to-1 client to advisor ratio if you truly want to manage ultra high net worth wealth. And that certainly did not, and again, not picking on any one firm, but you could not do that at your traditional large bank and wealth management firms, not only from a client to advisor ratio, but also from what type of services you can provide and scale that up.
Sure.
But not only what services, but what advice and how you execute. And a lot of things are put in the box. And when you're dealing with people with very, very complicated balance sheets, who are extremely sophisticated, who are running multiple businesses, a box does not fit, as you know. And so you have to explore other options, in your case, other situses from a trust planning standpoint. You have to explore other type of investment opportunities that are outside of the public markets. You have to explore other asset managers that are not inside of a captive institutional firm. So those types of independence and really true fiduciary hat, it had to be explored. And so I got to interview, I say that kind of tongue in cheek, I interviewed 22 different firms. I got to look back. It's 22 or 23 different firms, both some the large ones you all know about, some that are fully private, like my firm now, Summit Trail Advisors. So I got to see all the different business models that were really, it was really nice. It was everyone really opened up the hood for me. I could look under the hood of all these different business models that have been successful in this area. And then I was introduced to Summit Trail in late 2018. And what they did, David, really was I was looking to actually, hang my own shingle and start my own firm, and went through that process to explore that option. I wanted to make sure I had ownership. I wanted to make sure we had control of how we serve our clients and what we provide them. And so that's kind of the only way you can do that, unless you join an existing firm that allows you to do that and be a partner, or start your own. And what was great when I met with Jack Peterson, our managing partner at Summit Trail, for the first time in New York, and also I got to sit with through a video call with one of my other now partners, Peter Lee. Our founding partners came from Barclays, so another bank-owned wealth management firm. I'm coming from Wilmington Trust, and in the first 5 to 10 minutes, we're having these conversations, and we're kind of finishing each other's sentences about the things that we wanted to accomplish for our clients and for our careers. And you're coming from the same exact background, and they really built exactly what I was looking to build. And with the level of sophisticated clients that I work with, I'm very fortunate to work with them. They had the platform, and they had the technology, and they had the, I would say, like-minded expertise and experience that I had, that made a lot of sense to partner with them. And
well, it's like the best of all worlds. I mean, you were able to establish your independence, but on a sophisticated platform that gave you not only just the independence, but again, avoiding the conflict. I wanted to read something that I noticed on the website. I really like the description of the company. The diversity of our team's histories, from large financial institutions to endowments to the military, to structural engineering and marketing combined with our independence, strengthens our collective investment insight, problem solving, and conflict-free decision-making for better results. And I really love the way that resonates, because it sort of hits all the things that drove Bridgeford, to be honest, to sort of launch itself in the same vein. And I mean, first of all, congratulations. I mean, I know you've had tremendous success there already, and I know within the network of your partners, you've earned their respect, rightfully. But tell me some more about what is it about not only their paradigm, but the platform itself that is so compelling for all those clients that you were able to bring over.
Well, again, I got to thank you, man. You're letting me talk about my business and my company and our firm and Summit Trail. So I appreciate you letting us do that. That's really cool of you.
Well, I told you I just needed a good looking guy. That's really why I'm here. It's not because there's anything you have to say. All right, please continue. No, seriously, it's very interesting.
I got to make sure my wife watches this podcast. One thing that is kind of what we're not owned by any outside firm. We're partner owned. We're a private RIA. And we really do manage by consensus. Again, we do have a managing partner, Jack Peterson. We have a lot of great leadership by our CIO, Dave Romhilt. And what we do lead by consensus. And sometimes that takes more time. But I will say, given the collective backgrounds that you just went through, having different points of view, having different experiences, but yet, having plenty of institutional experience in terms of scaling a business, but also more tactical experience that may be outside of the traditional background of the wealth management arena, allows for really dynamic outcomes for not only just our company, but our clients.
Yeah.
And so I think that's something that's very different.
I love that. We're doing the same thing at Bridgeford. We're adamant about running the company by consensus through a senior management team that has multiple viewpoints, and I think that's the way to do it. And I love the privately held aspect. I mean, I think and of course Bridgeford is as well, and we're adamant to maintain that. Although we've been approached multiple times by private equity to buy us, we're not for sale, and we're sort of wildly independent. And what I'm getting to is it's that independence, I think, that makes us both special in the marketplace. And so, you're able to make decisions, but you're also not part of a major international conglomerates like some of my competitors have become, and which isn't good for the industry. I mean, you and I started these respective companies, I suppose, or you went and built your practice there, to be a complete opposite of the institutionalized approach, right? So having you say that you guys are independently owned or privately held, to me, I think our audience needs to understand that and why that's so much of an important differentiator in the marketplace right now, given that everybody's going in the opposite direction. Everybody's selling themselves, right? And I don't think that's good for the
David,
industry.
you sit across from clients all the time, and
Mhm.
when they're a business owner, you're one of their peers, right?
Absolutely.
You're not a vendor. You're not someone who's going to be one of 10 on an RFP. They look at you as a peer because you're a business owner and you were an entrepreneur and you took a huge risk to do that, which they did the same when they built their business. I think that resonates because you've gone through the processes that they've gone through. And now sitting on the same side of the table as a client today, which we do as true fiduciaries, truly independent, that changes the conversation entirely. That's why we were able to do some work with you at Bridgeford, really, right? When we go through and provide some, trust mandates over at Bridgeford, because we're not tied to one trust company. We can figure out what's the best solution without having any type of uncompromising, I would say, pressure to go with one direction or the other. I mean, it's really, truly the best thing for the client. And everything, in our situation as yours, we're fiduciaries in everything we do. And so I don't think you can say you truly are, in my opinion, and that could be, some people could disagree with me. I don't think you can truly say you're a fiduciary unless every option, no matter what it is, if it's a trust company, if you're looking at a bank loan for a client, if you're looking at an external investment, whether it's a private equity fund or debt fund, you have to have that independence to say, yes, I'm a true fiduciary. I mean,
I agree
that
completely.
to me is just paramount, and it's number one. And the other thing you mentioned, which is interesting, yeah, I mean, our businesses, whether it's a recurring fee business in the trust side that you guys have, or in the wealth management side like us, um, man, yes, of course, the private equity world is circling. It's really, I mean, look at the insurance business. The insurance business has gotten really expensive from a valuation perspective because it's very predictable business. And you look at what's going on in the world out there. Predictable businesses are getting really, really nice valuations right now. And so I think it's interesting. It just kind of goes to what you've built and what we've built as well. And when you think about kind of the future, I think independence will continue to be hard to maintain, right? Because there's external factors. But when you build it correctly and with the right partners and the right management team, I think that's how you can maintain it for the long term. And
I think it can be sustainable. Absolutely. Yeah.
yeah. But no,
Well, yeah, congratulations for what you've done. And I want to take us back to a dinner that we had, I don't know, a couple months ago in Harrisburg. And in addition to you guys introducing me to some great wine and a nice headache in the morning, I thank you for that. We had an unbelievable conversation. And,
it was a lot of fun.
it was a lot of fun, but
That
there's
should have been a
also,
podcast in itself, David.
yeah, I wish we would have
Should have been.
recorded it. I don't
Yeah.
remember all of it, but I'm sure it was great. No, I'm kidding. No, and what I'm saying is it really has stuck with me. And Terry Harris and I talked about just how highly intellectual that conversation was. And we were hitting on some big issues, big ideas with the mutual clients and your partner, Kevin, who's also amazing. And it's not every day or often even that I find myself sitting with people for when we were together 2-3 hours and talking about big ideas, big issues facing. And that's what I want to bring us back to a little bit for our conversation today, because I've become so intrigued, almost somewhat obsessive, I guess, about what's going on around us. And I know people like you are always aware of the micro and macroeconomic factors and the issues facing families and the economy and political, geopolitical, because those are the things you have to anticipate when you're helping your clients answer these kinds of questions or all kinds of questions when you're planning for them. And so as we talked about over dinner, I want to bring you back and have you express some opinions about what you're seeing. And I'm talking about in particular what is concerning to me and some of our largest clients across the country is, and I've been saying this as a theme. I mean, there's no question we're in unsettled times, and at least in my generation, I don't ever remember there being so much instability, if you will, in the United States. And I'm not just talking about what Congress may or may not do in 2025 with the tax rate or the traditional things that people worry about when they advise their clients. I'm talking about a political reality, not taking a position, but just pointing it out of just. I mean, there are some that have an opinion, and they're not wacko conspiracy theorists. They're people who really worry about what happens after the election, regardless of who wins. There are some very smart people who have wondered, are we heading to a civil war? Now, I don't believe that. I don't believe the banking system's collapsing or anything like that. But the reality is, I don't ever remember this. And then you look at geopolitical pressures and concerns, and it just seems like there's a very high level of anxiety that I have talked to. That I've been approached by some of our largest clients saying, "Hey, should I move my money offshore? Should I have an offshore custodian? What should I do?" They're worried about asset protection, but not in the traditional form of asset protection. They're worried about how to protect their wealth if there's some sort of crazy collapse. I mean, let's be honest. January 6th doesn't happen in this country, right? We sure hope it doesn't happen again. Watching some of the things that's happened in the court system with politicians, I mean, this is unprecedented stuff happening. So how do you analyze this? I mean, you got to help your clients figure out what to do. This must be coming up in your conversations.
Yeah. Well, thanks. That's a great question. It could be a whole podcast in itself,
or dinner,
or dinner again, which I'm sure we will do that. And but really, I think there's something you have to look at, and that is there's actually an asset class that people don't think about. It's called volatility. Volatility is an asset class, and it's a hard asset class to actually trade on. And what I mean by that is there's implied and actual. And we actually there are strategies in terms, and this is not the answer to your question, but this is more of a how do I juxtaposition your question to an example of my thinking, and that is implied volatility and actual volatility are always different. The VIX the other day, by the way, jumped 97% in one day to 49. If you're familiar with the VIX, which is the fear gauge of the market, right? It dropped like 30 some percent in the same day, and then dropped another 30% the next day. We're talking just 2 days of trading. That's called implied versus actual. Means there's a spread between what took place on the options market on the fear gauge. Meaning there was more fear than there actually was. And so there's actually put option strategies around that. So let's juxtaposition to your comment. Yes, there was absolutely unprecedented things happening globally, geopolitically, that I worry about all the time for the U.S. economic situation, for the markets, the global markets, not just here domestically. However, I do believe if we had to put that same thought process over kind of the global fears that exist, I'm willing to bet that implied fear would be a spread versus actual in terms of the outcomes of what takes place. So
interesting. That's well said. Yeah, I get that.
I really think that is the case. Global economies are tied together, more than ever, even though they're no matter what side of the political spectrum you sit on, whether it's more protectionism in one country or the other, nationalism, global trade is going to continue. And we're not all going to, go hide inside each of our countries and not work together. That's just not going to change. Innovation doesn't take place in a vacuum. And so I really do believe that the elections do matter. They absolutely do. But as a financial guy, I think they matter less. Of course, what's going to happen on the corporate tax rate and tariffs and everything else does matter. But what's great about the United States, I'm a fan, which is that We
Good.
innovate.
I'm glad to hear you say that.
we innovate better than anyone. Matter of fact, just look at the indices. Again, all the major indices in the world. Once again, the S&P 500 year to date is the best performing index in the entire world. So that continues to be a bright spot. And why is that? Because I think we have the most innovative management teams in the world. One area I would say I'd worry about more than the ability for corporate firms in the United States to manage through any type of crisis, whether it's political or otherwise, is, I worry about our sovereign debt. That's an area that I do worry about. I think anybody sitting in my seat or other, in this industry keeps a close eye on that. Obviously, with interest rates where they went, and you think about the interest expense that we have to look at on a go-forward basis, that could hurt growth. It could hurt GDP, right? Because more money going towards debt servicing rather than other programs that could be used towards growth within our country. That is a potential issue. How do we work through that? And so that is an area of risk that I am concerned about. But in the near term, that's longer term. In the near term, I do think that the current economic position we're in, we had a recent sell-off. The NASDAQ had a 13% peak to trough sell down. I don't know if the S&P did a full 10% into correction territory. I don't think it did. I think it was real close to it from peak to trough. Month to date, I think the S&P is down like close to 6%, but it's rallied back here the last couple of days. But my overall point is I think some of the economic issues were a little bit overblown from an employment standpoint. And then at the same time, the Fed still is in a great position to cut, to ease. And so, and then so you pair that going into an election season. What does that mean? I tend to look at it from the lens of, if Congress and Senate are split, less gets done and the private sector takes over and does what they do. And everything goes back to earnings. Now, if you're concerned about, programs that are going to be supported by the government, political strife when it comes to how people feel, whether they're divided red versus blue, that's a whole different thing. I look from the lens of the financial lens and the health of these companies and the health of earnings. And also, do we have the ability to preserve and grow our clients' assets over the long term? That's still in play. And that's what I get comfort in. And so we're going to have recessions. We're going to have pullbacks in the market. But looking through history, and that's why we've always, if you look at any investment manager, you've always overweighted the indices within portfolios because we've been able to innovate faster than other countries. And so far, that continues to be true. And not to downplay our wonderful politicians, but sometimes, in my opinion, David, this might be a little bit of a hot take. I think it's a little bit of a sideshow. It's a sideshow. Yes, they create laws, but there's so much influence from Wall Street. There's so much influence from tech that there is a profit motive for innovation. And so I do believe that that's going to help drive economies, jobs, everything else that we need for sustainable markets.
Regardless of politics.
Regardless of politics. And I try to, again, maybe that's the centrist guy of me. I'm not sure, but I so far over the last 100 years, that's been correct.
Well, and it's optimistic, which I love to hear because there's so much pessimism. It's hard not to be influenced by that. Everywhere you look on media and social media, everybody's hair's on fire and the world's falling apart. And it's easy to sort of take on that approach. So I love your approach, which is, hey, listen, we have systems in place and markets in place that have performed well for 100 years, and there's no reason to believe it's not going to be the case going forward, is really your message.
It's a bit of a psychological experiment in my mind. I mean, not to go off the rails, but it's like, where does, or better yet, who are we to say in this generation that we have such impact that's going to change 100 years of history?
Because we're a bunch of narcissists in this generation.
Really, I think in our business, my gosh, if you're not humble, if you work in the wealth management world, or if you deal with public markets, if you have an ego, you will quickly get checked. If you need to be humble, right? And so,
sure.
I think it's an interesting, when I see the online dissent and the online behavior that exists out there and the talking heads we see in the media. I'd like to think I'm more of a calm guy, but I kind of shake my head at it as if this point in time is the most important time ever. I just don't agree with that. I just think we are in a time of absolute, chaos on the surface as it relates to what we see in the news. But underlying that, we're in probably one of the greatest innovative times in the history of our country and then in the world as it relates from technology standpoint. So how do you pair that in an investment thesis? But then more importantly, in your world, how do we pair that in a planning thesis, right? And so, I think that area is why your services are so great, because you have states like South Dakota who see that kind of light at the end of the tunnel going, hey, let's be a bastion of opportunity for folks who are trying to do what's right for their families. And let's kind of, be business friendly in that aspect. And by the way, I should tell you, I did a ChatGPT inquiry on the top South Dakota trust companies. And you should know, I don't know if you've done that yet, but Bridgeford Trust is named number 2 on ChatGPT. So
Wow. Jeez. Not number 1? What the hell's going on? I'm not paying somebody right. That's amazing. I thank you for sharing that. I'm humbled to hear that for sure. And that's great. I have to get better at the ChatGPT stuff. I still write things myself these days. I'm like a dinosaur. I actually write my own articles still.
Well, I definitely don't. I don't use ChatGPT to write anything. I feel, but I will say, in terms of doing a little bit of research, but also kind of running some models, it's really interesting. It's really neat in what they can do already. And matter of fact, I mean, you can compare. You can go on ChatGPT and you can try it. You compare South Dakota versus Delaware, right? And it really outlines it for you extremely well. And so I think that's just one little instance of what all the capabilities are. But of course, AI is one of those topics that when you think about all the craziness that's happening in the world, AI could be a really wonderful thing. It could be a bad thing. But again, I look at productivity levels when we think about assessing the markets. It's only getting better from a productivity standpoint. And again, I'm not all rosy and everything's perfect, but I will just say that it's never. I guess I'll end that thought with it's never as bad as we think it's going to be, but it's sometimes not as great as we think it's going to be either, and it's usually somewhere in between. And that's kind of where we try to live and where we operate.
No, I love it. I love the optimism and the pragmatic nature of how you're describing it. I think it's refreshing too, actually, given the conversations I have across the country with people. It's a nice approach to hear, and I probably another one of the reasons why I'm so drawn to you guys and what you're doing. And I want to congratulate you again on what you've built over the years. I mean, I'm not overstating just how stellar your relationship or your reputation is in the marketplace. And I love how closely aligned we are from a paradigm perspective, the way we want to run our businesses and the way we want to serve our families. And I see us doing great work together for many years to come, and having lots of dinner and lots of wine in the future as well. So thanks again for taking the time to be part of this. Thanks for being the first video participant. And I'm glad I've remembered to shave moments before because I did forget this was going to be the first video. But Jonathan, thank you again. Anything you'd like to share before we say goodbye to our listeners?
I think we're on to like this next time we get together. If we want to do a podcast, you put the microphone in the middle of the table. It will be over at the Hilton. And we'll have a dinner. We'll get a closed room, and we'll have a real podcast with maybe multiple guests. And you can have kind of like this new Bridgeford Trust like quarterly live dinner podcast. That would be a really great idea for your platform, man.
I think that is brilliant. I will have to talk to Melissa about that. Well, my friend, again, thank you for everything. Thank you for all the great support. Of course, you have ours. For those of you who want to contact Jonathan, and I highly encourage you to do so if you're thinking about needing sophisticated solutions for your families or for yourself. Jonathan is one of the best I've met in the industry, and he's right there in Central Pennsylvania. So his information will be connected to this podcast information, and feel free to reach out to him, and feel free always, of course, to reach out to Bridgeford or myself if you have any questions about trust planning and South Dakota law. Thank you again, Jonathan.
Thank you, David. It's been a pleasure, man.
Thanks again for listening to Bridgeford Trust Company's Delivering Direction and Control podcast series. Be sure to subscribe to our podcast to keep posted on when new episodes are added. And for more information, you can visit us online at bridgefordtrust.com.